Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, October the 23rd, 2012. We've got a few markets to look at. We're going to look at some European markets and U.S. markets. It's basically a hodgepodge of different indexes for you guys to check out. Starting off with the Australian markets, before I get into this, I want to point out that I see the market as having a bigger move to the downside here. Then we've actually already seen this move to downside has been great. We've timed it perfectly. We've made money, but I actually think there's still a great deal more to come. And I want to start looking for more opportunities that I can find on the short side in this environment. We're looking at Australia's market to start off with for today. This has been in an uptrend, so this actual call right here is a counter trend move. It means the risk is greater in that scenario whenever you do that. But if all markets are going lower, then Australia's markets will follow suit as well. That's what the logic is there. You'll notice that today's activity is a shooting star signal. It's one of the things that we were missing over here. We're also talking about this rally to the upside. Notice high close here, and the high close here was trending up. The corresponding time period in the ultimate oscillator, high point here, lower high here, it was trending down, telling you that this is a bearish divergence and this is all a rally that's unsustainable and will eventually fail. So we're looking at that as being possibly happening as soon as tomorrow. So what I would do is, if you get a lower low than today, is by even 1 penny intraday, you can start selling that with the stop set off of the high and look for that test of the 50-period moving average down here at this level. You also notice that you are overextended from the 50-period moving average, and that's typically where you start to get your peak points, and so it's an important little bit of information. We'll take just a moment, look at the Dow Jones Industrial Average. Been tracking this one. It's an open position for us, as well as all the U.S. markets, or most part of them. And we've advanced the stops on all of them. I'm not going to show them all to you. You can go to the free website at PerfectStockAlert.com, where my charts are kept there with my notations on them, update every single day, as well as my advanced stop loss limits and so forth and so on. So you can check them out there. I just wanted to show you guys that what I've done basically is advance the stop on this particular average from the previous high point here down to this point here. However, I talked about this yesterday. This stop is actually one that's only there just because the rules state you need to lock in a minimum gain after you've had so many days to the downside, and that's fine. But again, this would be the point on this red line right here, the 50-period moving average, where I'd want to be shorting again if that we did see a bounce like that. I don't see a high likelihood of that bounce, and that's why I've advanced the stop at this point. We had more likelihood of that yesterday with the activity there, but now we actually broke down very good, and that's cool. But I would look at any bounce that you see in the market as being a short opportunity at this point in time. And here's the basic logic. You've had this little move going on for an uptrend for a while. You get this pullback. You get the Fed's, stimulus, QE3. We rally up here, we hit resistance, and we pull back. We hit again, we pull back. We hit it again, and we fail. Now we've pulled back down to where we were before. Logic that we're now going to turn around right here, go up here and break out is silly, in my opinion, because you already tried that here and you failed. So the idea that you can now, from this same point, run up there and break out, I don't see it. So I expect this move to be much larger to the downside. Looking now at the French CAC 40 index, this is one of the other positions in the Europe markets that we were liking on the short side here. It was very clearly defined for us. Talked about we had a potential head and shoulders formation, with this being the first shoulder, this being the head formation. Then we were watching this as potential second shoulder formation. We wanted to see whether it would roll over or not. It did. We got short, and now she's confirming that, moving even lower. We want to watch this neckline here. This will be the next opportunity you can actually short when you close below that point. Once you've done that, say that sometime this week you actually close down here below this point, you will then take the distance from the high point down to the neckline, measure that out mathematically, subtract it from the breakout point, and that could be further down the road, but we'll talk about that in a second. And basically you get an idea or a target of how low you expect price to fall before you get some kind of a bounce support or something like that. So that's a big move again to the downside here. Any bounce that we were to get on this particular candlestick, I wouldn't expect one. This candlestick is a confirmation, not confirmation, but a continuation signal to the downside, as telling you to look for more selling here, not a bounce, so I wouldn't look for one. But again, note your 50-period moving average. This is where you want to be getting short at or above that point whenever you're in a downtrend, which is what we expect to see here with a high point here, a lower high here. And this is a low point here and a lower low coming up as well. So you're in a downtrend. You want to be shorting as close to that 50-period moving average as possible. Those are great short opportunities. You also notice overbought condition on the ultimate oscillator. That's why we were entered in that position. Everything there was perfect, and this trade is working in our favor. Great. Let it run, and then we'll advance the stop once we get down there. But again, expect a big move to the downside. The German DAX composite, you could actually take a short position on this now. Note your price relative to the 50-period moving average. You're actually just right at where you want to be going short. This is something you could, like I said, go short, but I'm not actually taking this position at this time. There's not a real logic here for a bullish argument, and I'll show you why. You've got this little support line here that's obviously broken down now. You've closed below that point. That would be confirmation, an opportunity for to go short there when that's happened. Right now, your stop would have to be set off this high. It's the only one that's logical because you could have any kind of little price activity come up here and still be in an overall downtrend. That's why you must set the stop way up here. The idea that you are from this point going to then reverse and come up here and break out the upside is illogical to me because you've advanced off that point before, failed, advanced again, failed, advanced again, failed, advanced again, and failed. The idea that you're now going to break out here and rally to the upside is insane, especially with the overall markets going lower and the fundamentals of deteriorating that much more. I don't see it. In fact, I think you're basically looking at this as being the start of a peak and the start of a new trend from an uptrend to a downtrend. So this is something you could trade. Quick little glance here at the London Financial Times Index, the FTSE. This one is in a down move as well here. You'll notice the high point here was higher than this one here, and now you're starting to make a nice move to the downside here. Real strong activity here, closing below the 50-period moving average, and you have a continuation signal telling you to look for more selling. That's going to give you a lower series of lows. That's important because it means that the very next bounce you get will be a great short opportunity. The Toronto Stock Exchange, this is another position we're already involved in, but somebody could take a position as of now. Note the price activity is still trading above the 50-period moving average here, but you are in a downtrend. Note the high point here, lower high here, a low point here, lower low here. You're going to continue to move lower here, and so you'll be looking for short opportunities, be looking to sell and work with the trend rather than against it, and the best opportunities for that will be at or above the 50-period moving average, so you can get involved there even if you are late to the ball game. You'll notice also Ultimate Oscillator is only at 51. You're not way down here under the 30 line, which is where I would prefer not to take a new short position if I felt like there was potential for a bounce there. I wouldn't take one there, but right now I wouldn't feel too bad doing that. Right now you keep the stop where I'm at right here. For those of you who are not comfortable with the stop at that distance after you've already made so much money on the table, you can advance it to wherever you see fit. Best place would be the high point of once it above today's high. That would be the logical one, but it wouldn't lock in much of a gain. That's why I'm waiting for another day to the downside. Then I'll advance the stop from where it's at, down another day, maybe here, some of that nature. If you've not been to the free website at perfectstockalert.com, I recommend you do so. All these charts and many more are kept on our free website there and updated every single day, including where I've adjusted my stop loss limit for each day's activity. And I have done that on many different charts, especially in the U.S. here, and chosen different locations for different charts, so it's important that you just go check them out for you. Again, thank you guys for your support. It's a free service. All we ask in return, please refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.